This is Ron Brown. I'm going to do a quick market analysis using some of my new files and charts. I wasn't going to, but I decided I'd just show you a couple things. I'm going to go into my market analysis user groups to the Major Markets Plus, click through to the warehouse view, and then I'll go to my Ron Brown Quick Start End of Day under the first folder top-down prospecting view, and then click on top-down analysis Major Markets Plus. I'm sorted on raw combo. If you look up at the top, you'll see this sort is the percentage price change 1 day. So this shows what happened yesterday, or Friday, I'm sorry. Volatility index was up 16.8% and over 5 days 13.1%. So mostly on Friday, closed at 70% of its daily range. On the other end of the spectrum, the Philadelphia Semiconductor Index was down 2.5%, over 5 days down 1.9%, so most of the damage was on Friday. I'm going to bring up a chart here, and this is a chart which you can locate in my files under the basic end of day charts. That would be folder number 3, number 1, and what it does is it draws trend lines based on the zigzag indicator and sensitivity. So these lines are drawn whenever there is a 2% change in the zigzag indicator. It draws automatic trend lines. And you can see that the VIX jumped up here. Here was a reversal day on Thursday, and then it jumped up here. It looked really bad or really good if you're along the VIX going into the late afternoon on Friday, and then it pulled back. But still, there is fear coming into the market. The VIX, though, the actual number is 13.16, which in the scope of things is really low. In fact, just take a look at a long-term chart here, and you can see that it's way down here in this range. When volatility gets very high, you're going to see it spike up here. We're a long way from that at the moment. Let's take a look at the SOX using this same chart, and you can see what has happened. This sold off hard back here, rallied, got up in the resistance area. You can see resistance is over here. It failed again, then a big move down, and now it found support in this area, moved up, looked like it was going to go back to possibly challenge the old highs, but over the past 2 days it's been hit very hard, possibly on tariff concerns. I don't know that to be a fact, but it certainly is painful. So looking at this, and let's do one more. Let's go into the NASDAQ, since most of us follow the NASDAQ, and I'll just zoom in on this. Let's go in on number 1. What do we see here? Well, as I zoom back out, we see a index which is challenging its 52 weeks highs, and then as I zoom back in, we see some good VPA flags here which signal the up move, and then I see several days of very small bodies. These are spinning tops. This is a price rejection here. If you click on that, it tells you that there's no demand, a sign of weakness. You can see the long upper wick, and then yesterday there was a gap down. We end up with a spinning top. So even though this index is very close to breaking out, it looks like there is some distribution here as resistance is reached. Now, if you want to know the actual, if you use this chart, you click your alternate I key, you click on the last day, and it tells you what that what the support and resistance lines are. And the resistance line is currently at 79.33.31. Now, as I look at the warehouse view, I can get an exact number where we are from the 52-week high, and we're only down, or the index, the NASDAQ's only down 1.2%, up 26.9% from the 52-week low. And you can see that it's still in an uptrend based upon the calculated VPA numbers, and the EMA fan is still intact, which means the index is above uh, the 18, 50, 100, and 200 day uh, exponential moving averages. So this is one way to look at the market. There are major market ETFs you can look at here, which give you a look at the market through the ETFs. But I'm going to go down to my broad market indices, and I'm going to go back to my top-down market analysis view, and I'm going to show you something that I've included in the some charts that I've included. I've had them around for a long time, but I did some rearranging and so on, and I'm going to just take a look at it. So let's go to the All NASDAQ. I'll click on this. I'm going to go to my quick start end of day charts and go to the HGSI index charts. I'm going to click on the first one. I'll make it full screen. I'll hit my alternate 3 key to give me a long-term perspective on this index. Okay, I'm going to see if I can zoom out just a little bit more so we can really see a longer term look. Now, this is white down here because the VPA flags and signals will not be generated until you have at least 120 days worth of data. This is a 2-year index chart. I index for 2 years using market cap weighting. And then when it turned green here, you can see the trends. And if you click on an area like where it's blue here, it's going to tell you the long-term trend up, the medium-term trend is down, and the short is up. If I click over here on this green area clear on the far right side, it says long is down, medium's down, the short is up. If I click on the last day, it tells me the long-term trend based upon the best fit trend is down, medium is up, and short is up. But if we look at this area and look back, you can see that I'll put a crosshair on here. Using this market cap weighting, the market really hasn't done much for quite some time. Now, what I really want to point out here, though, are these windows. Here's the accumulation distribution window. We are on C accumulation, which means essentially neutral. What has happened here is that the A accumulation has come down to meet the E distribution. When the market's really strong, you're going to see spikes up where the green and the red separate. So if I go back here, you can see the market's really moving up sharply. Accumulation A is near the top. If I go down to the second window, which represents A and B with the green line and D and E distribution with the red line, there is a great deal of separation between the two lines. So what you're looking for, an indication of a strong market, is when the green line is up here. An indication of a weak market is when the red line, when you see these peaks in the red lines. So I'm going to go through a few more. I'll stay on the NASDAQ. This is accumulation again. You can see the actual flow of accumulation distribution with these lines right here. Over here it tells you what these represent. This is a different look using Chaikin money flow. During a really strong market, Chaikin's going to be up, pushing higher, pushing higher. Here it's fallen. It looks like it's just fallen below the, well, it hasn't quite fallen below the zero line, but it's getting close. I'll leave it at this magnification, but everything is moving down. Going down to the next chart, this is the advanced decline line. When the market's really moving up sharply, you're going to see a lot more advancers than decliners. What do we see here? We see the advanced decline line is essentially flat from, looks like early July to right now. During the big up moves, you're going to see it well away from its moving average, and now it's coming back to its moving average. It was actually below it there, but it's turning down. So we're seeing a loss of momentum is what we're seeing. Now this is a percent of the NASDAQ above its 20, 30, 50, and 200-day moving averages. And you can clearly see that these stocks within this index have lost momentum. On the 50% above the 50, it's fallen below its 50-day moving average line. So clearly, once again, loss of momentum. When the market is strong, you're going to see all of these moving up above their moving average lines, and you're going to see peaks up here. We're a long way from these peaks. On this one, below the, you can see how far this has fallen from here to here. And I've got another chart which shows that a little bit better. This chart right here, I put this together years ago just to show when there are potential buy-sell areas in the market. If you have, you can see how choppy it was in here. This over here explains what it is. If you have I'll use this one right here as an example. A 5-to-1 down day on decliners versus advancers, and the volume is the same, and the force index, both of them turn red, and the volume point of control also is red. You're going to get a red bar here. It's a possible sell signal, but it was just a short-term sell because the market bounced around and rallied again. And I haven't really seen a lot of conviction in either direction lately. It's really a hard market to read right now, but the charts have shown that the momentum has really fallen. Now here's that percent above the 50-day moving average again, and you can see that if I put a crosshair on here, when the market's strong, like in here, this is moving up. When it weakens, these obviously drop down, or this line drops down below the moving average. And same thing here. It's just been falling as this market has been chopping around. Very difficult market to buy stocks right now and expect them to trend up. There's just a lot of choppiness. Now this is the final chart in this series. It gives you the internals for the last day. And this is the cumulative new high-low line, which is very slow to turn. So I don't pay a lot of attention to this. I look at a lot more at the accumulation distribution and the percent above the moving averages. But these are the charts I use to analyze these HGSI indexes. Now I'm just what I like to do. Let's see. I'll just pick the first chart. You can just start up at the top here. Here's the small cap institutional. If you highlight this box, you can use your down arrow key just to flip down through these charts. There's these are the small cap indexes. We're seeing that's a transports, which doesn't have very many stocks in it. But you're just not seeing a lot of conviction in any of these indexes. Here's the 50% all stock institutional index. This one's holding up a little bit better. It's got a slight upward bias and so on. Here's the consumer discretionary, Dow Industrials. But just I like to quickly flip through these using the charts, look at accumulation and the other indicators. That's it for this. Just a very quick read on the market. I'm seeing, I know we're near all-time highs, but over the past several days, there really has not been any conviction to take this market higher, and there has been deterioration in the stocks that are contained in these indexes. Thanks for listening. Have a good weekend.